Yeah, I would say a really good indicator of how you need an attorney is when you talk to them. If you feel like an idiot, you definitely need them, and they're probably really good. How's it going, guys? Welcome to episode 6 of How to Invest in Commercial Real Estate.
What is up?
Today, we're going over things we wish we would have known when we started. That's a lot of things, so we'll just give you a few. Brian?
Well, one we've talked about on podcast before is we wish we would have bought bigger deals, right? I wish we were buying bigger deals right now, and we're moving towards that way, right? We say we wish someone would have told us that. Joel's talked about the fact that he bought houses and was flipping houses, and that's how he got started. But, flipping a house isn't easy. And I'm not sure, Joel, now that you've bought some other deals, whether you think it was harder or the same or easier or what, based on what you've done since then.
If I knew the power of commercial real estate and the bigger deals, then I could have saved myself a bunch of years and headaches dealing with learning how to flip a really cheap rental house.
And spending all that time, like you
all
said.
All the time, driving the neighborhoods, looking at $20,000 houses, and then figuring out how to get a loan for that, how I'm going to fix it up, and what contracts I'm going to use. All of that time could have been spent looking at how to flip an apartment complex, let's say with 50 units or 100 units.
Yeah.
And it just took me a few years of time. So that's why this one is important.
So you're making $10,000 a month on an apartment by all the leases there, rather than one home where you're making $200 a month net on that lease.
Yeah,
right?
and it's not that people can't, in the meantime, work on a small deal, but they need to be trying to buy bigger deals, trying to do that. That's the point of that, is just try to find and buy bigger deals.
Well, I think the next one's a good segue from this. I think the best way to buy bigger deals is to partner up with other people doing those deals. If you want to buy a bigger retail deal, go find somebody buying big retail deals and bring value, bring money, bring debt, bring the deal. Go to them and say, hey, I want to do this big deal. It's a little over my capitalization limit, but it's a great deal. I've got this lender teed up. I've got some investors, and I'd love your help on it.
Yeah, absolutely. Be willing to even work for free. Part of going through this process is not always needing to be paid for everything you do. You may not be bringing much to the deal, but work for free for that person that you're partnering with. You'll learn how to buy that bigger deal with them, maybe even allow you to sign on the debt with them, just to be involved, and that'll help you more quickly get into bigger stuff.
Yeah, don't be afraid to lean on the experts, because if you think, well, I'm not sure how to do this contract, well, just know you can go find a lot of attorneys that do know how to do the contract, and don't worry about that. And then when you worry about, well, how do I get a loan for this? Well, go to a mortgage banker. He's going to help you through it. He wants your business, and he's going to tell you all the different ways to raise debt and to get debt. And so no matter what it is, just know that you can rely on somebody else to do that for you and help you with it anyway.
Yeah, Joel, are you an attorney? I'm not an attorney.
No.
I'm far from an attorney.
I play one on TV.
Brian, do you even have your real estate license?
No. What's that?
Yeah, I have mine, but I don't really use it. There's so many things that you need for commercial real estate, but it's like when your toilet backs up and you need a plumber, you call a plumber.
Yeah.
When you need to raise money, you need to get an attorney.
Well, so there's a few other experts that I didn't do a good job of leaning on. And, when I would go to buy a property, lean on the broker, get yourself a buyer broker, have them kind of vet the deal. If they can get on board with it, it'll at least help vet your numbers.
Plus, they don't want to sell you a shitty deal that doesn't work out, because then they can't sell you another deal. They want repeat customers. And
yeah, obviously, an attorney is going to protect you in the contract. They'll have languages and protections to make sure that you don't lose money or get screwed or miss a date. So that's important. In the beginning, we didn't know to hire a property condition report. So I was going around looking at this apartment building. I have no business evaluating what's behind the walls and what are the hot water boilers look like.
There's about 5,000 in wood rot on this deal.
Yeah, we bought some stuff without knowing the inherent problems, and a lot of it could have been solved by just hiring the professionals to tell me exactly how much time is left on that roof, what condition the HVACs are in, if there is wood rot, or termite damage or all of these things. And that's what they do for a living. They'll investigate the plumbing, let's say on a retail deal underneath the slab, things like that. So it's really important to make a list of experts and involve them in your deals, and they'll make sure that you don't make any big mistakes.
Yeah, I would say a really good indicator of how you need an attorney is when you talk to them. If you feel like an idiot, you definitely need them, and they're probably really good. Mm-hmm. I think that's a Joel quote, actually.
Yes.
You said, I think it was about an accountant or something, and you said, you know how I know we've got a really good accountant is I feel like an idiot every time I talk to her or something.
Yes. So you'll progress in your knowledge. And so your experts will need to get better and better as you get more and more experience.
Right.
So an accountant that may work on your first deal, or a real estate attorney that may work on your first deal, it may not be who you ultimately need when you got a bunch of deals in the pipeline. So for me, I do appreciate when the expert knows a lot more about their subject than I do.
Yeah. Something that's just like, along that, what I would say is I wish I'd have known you could partner with somebody. So in the case we were just talking about, okay, you're hiring an attorney or you're going to a mortgage broker or something, but there's ways that you can partner with somebody else. Like if you have found a deal, but you don't know how to raise the money, and you might have to go to somebody and give them some ownership, or you might have to go to a CrowdStreet. We've talked about that. You might have to give them some money to help you raise the money and partner with them. Or maybe you have some land where you could put a power center on, but you don't know how to attract the big box people, and maybe you go partner with someone who's a broker, for those
developer
people,
or a broker.
Developer.
Yeah. When we wanted to get into development and construction, and we had kind of identified early childhood education as a good asset class for us to invest in, we didn't just go say, hey, we're going to go build a school and we're going to do it in Denver.
Yeah.
No, that's insane. We found partners and people we trusted, and people who had built a lot of those before and had great relationships, and we leveraged that. We brought plenty to the table. They brought a lot to the table, and now we have a great deal.
It's good partnership. It's working really well.
Yeah, and we've gotten several other from that same partnership. Yeah. Now it's a repeat. We can recycle forms. You can recycle that relationship. You can cut past a lot of the BS because you have that relationship with them now.
Absolutely. One tip that I want to tell people that I'm really not good at is having the courage to ask people questions. There's plenty of people that know what you don't know about what you're trying to do. And I was just, early on, I was so self-conscious. I didn't want to look stupid. I didn't want people to know how much I didn't understand.
Or you think you're wasting someone's time.
Yeah, I feel like they're not going to want to answer my question, and I'm wasting their time. And that is the opposite of what you should do. First of all, most people are happy to tell you give you their knowledge. Maybe it makes them feel good that they know what they're talking about. Maybe that it makes them feel good they're helping someone. And so that's true. But don't ever feel like you can't ask someone a question. I think if you see someone purchased a retail deal in your market, because that information is available, go to them and say, hey, I'd like to set up a meeting. I'm investing in retail as well, and I wanted to talk to you about that deal. Why'd you like that deal? What'd you buy it per foot? Who did the loan on it? All of these are keys. Now you have a lender that will do retail. You know why an experienced person thought this was a good deal. Do that over and over again. Take them to lunch, buy them coffee, and learn from them, and just be asking everybody as many questions as you can.
Yeah, that's good.
I think that's a really good point. Mainly, you have to be able to humble yourself and ask questions. You have to be able to accept what you don't know, because you're taking too big of a risk with these real estate properties to just assume you know everything, and you don't. And there's going to be people that will definitely be able to help you along the way. There's no doubt about it. But the first step is asking the question, and the answer is automatically no. You don't know what you're doing if you don't ask it. It's no, and no, you don't know what you're doing.
Yeah. And I would say in reaching out and asking these questions, you're giving yourselves opportunity for partnerships and deals and an idea flow. And so you never know. You're one contact away. You're one idea away from getting in this game and changing your life. And if you view it that way, then you're going to be making as many of those connections and asking those people as many questions as you can.
If you have a question, feel free to send it over to Brian, too. He loves answering questions.
I do. I love it.
Well, another one, I think the last one we're going to cover today that I wish I would have known when I started out is how to underwrite a deal. And, underwriting can have a I didn't even know what the word meant for like the first half of my real estate career.
Yeah, let's define it. What is it?
Well, it really is the financial modeling of the asset to see what the cash flow is going to be. And it's also the evaluation of the probability that cash flow is going to materialize in the future.
Okay,
At least that's how I use it.
Okay, but when you're, let's say you're purchasing a multifamily asset, I thought the people that were trying to sell it to you, I thought they would come to you with that information, with a pro forma on that.
Yeah, don't they just give it to you?
Yes, and on my first couple deals, the big mistake that cost me time and money was I assumed that they were telling me the truth.
Whoa, so you didn't ask a question and it got you in trouble?
Yeah, I didn't.
Wow.
I didn't understand how to financially analyze and model the deal from my perspective. So if they said, "Oh, I collect this much money, and then these are my expenses, and this is how much money," I just didn't know how to not trust that. And so you really need to get good at modeling your own deals. With there's commercial real estate software. We have a model we use. And then also knowing where the risks are, because obviously this is a projection of what we think the cash flow is going to be, but where are the risks of that not materializing?
Where are the soft spots in the chain?
That's right. Or where can the numbers be off? Where can the seller may have missed something, left out something? An example is, I think you mentioned it before, real estate taxes. A lot of people don't, like in retail, the real estate taxes will reassess usually on a purchase price. So if it was purchased or sold, several years ago, and the taxes are way low, and now they're about to double because you're buying it at a higher price, and they're not triple net leases where the tenants are going to absorb that, you're absorbing it.
Right.
And so that's like a little area that you need to know. And there's probably 25 of those areas that'll help you assess where all the risk points, the soft points are in the cash flow, and you'll be better able to understand what the performance is going to be after you buy it.
Yeah, I would agree with that. Due diligence is super important. You have to, just like we talked about in the previous episodes, in specifically in going over asset classes and knowing what indicators to look for. Like when you're buying an office building, you want to look at job growth. When you're buying a multifamily, you want to look at where those people are working and everything like that. It's the same thing with underwriting. You have to be able to know why you're asking the questions, and you have to be able to figure out that soft spot. You have to be able to know, okay, on average, maintenance costs at an apartment are $3,500 per door per year. On average, the real estate taxes for something like this should be this. And I think we talked about that in another episode. And it comes from experience, and it comes from underwriting deals. But going through, even if you have no intention of buying it whatsoever, and just underwriting it and projecting assumptions, and then waiting a year or two, somebody's going to buy it, and you'll be able to figure out how close you were. But the process of going through the underwriting is really valuable, and you get better at it over time. You make better assumptions, better guesses.
You could ask your lender. Lenders are always underwriting it as well. So when they're evaluating their deal, your deal, they're going through that cash flow and they're assessing risk. So something I didn't do a good job of, but ask your lender, hey, how are you guys looking at this? What are the risks? What are you guys modeling here? And that will even give you some insight.
So when you're underwriting it, is it just you guys? I mean, is it one person? Is it multiple people double checking the underwriting? Do you guys have somebody outside the company do the underwriting and to kind of help verify, or how much time are you spending on that? Because
it's important. I typically give a quick run through with our model and everything that I know, and I'll come up with what I think is the NOI, net operating income. But if we move to contract, that's when I want another set of eyes on it. So definitely we'll ask my mortgage broker or my lender what their underwriting is. And then we've also hired third party. There are third party people that will go through all the leases and will audit them and will build a financial model based on their view of those leases. And so then you've got another third party kind of confirming, hey, is his NOI the same as mine? And it just helps identify risks in that cash flow.
So I'm driving to a point here. How often are all of those underwriting, reports or outputs or, whatever reports you get from the underwriting, how often do they match exactly?
Like with mine and somebody else's?
Yours, or even somebody else in your company helping you with underwriting, or you said you wanted another set of eyes on it. When you're getting that fresh set of eyes on it, how often does it just match to the penny?
Well, it never matches to the penny.
Well, even within, I mean, $5,000-$10,000.
Probably, maybe half the time, because in these models there's assumptions. And you're assuming rent growth, or you're assuming a tenant may leave, or you're assuming some CapEx expenses in year 2 or 3. And so everybody's going to make different assumptions. And that's what the underwriting process is about, is identifying the risk and making assumptions on what that future cash flow is going to look like. So they're never going to always match as you make different predictions about the future.
But asking the question and getting those other people to look at it, it helps you identify those weak points. It helps you identify those discrepancies maybe of, hey, it was... Anyway, I think it helps to have multiple set of underwriting eyes. When me and Brian do a deal, we're both underwriting it, and we hire a third party, the broker's doing it, and the seller of the deal is giving you some sort of offering memorandum. And if those, 4 or 5 reports aren't pretty damn close, there's something going on, and I want to keep digging
Gotcha.
in.
Dig a
And
little deeper.
that's important.
Yeah.
Well, I think that these are some of the most important things that I wish I would have known in the beginning. I think they'll help.
Yeah, hopefully we've told people, from our experience, go after bigger deals, lean on the experts, don't be afraid to partner with people.
Ask questions.
And
learn how to underwrite.
Yeah, make sure you learn how to underwrite.
Yeah, I love it. Well, if anybody out there has any questions while you're listening or watching this, feel free to put them in the comments or send us a message. As always, check us out on the interweb. It's www.howtoinvestincre.com.
Thanks
for
guys.
coming, guys.
Yeah, thanks.